Test, test. Now's a good time to get your volume set. Somebody want to remind everybody to refresh their screens and test their volume. I'd appreciate it. Alex! All right, Columbia's on the line. Trinidad. Costa Rica. I need to get a visit into Costa Rica. UK. Miami. More Trinidad. Homestead. More Trinidad. City of Brotherly Love. Mexico. The Bahamas. You guys are everywhere. Another Costa Rican. Oh, you're welcome. California. Where you at, Michael? Oh, yeah, you told me. My bad. Dallas, Houston, Northern Cal. Where's Northern Cal? Where in Northern Cal? Nigeria, Milwaukee, Balmer. Balmer, Maryland. I used to live near Balmer. Sacramento. Can't you're not too far away. Southern Sacramento, Northern Sacramento, Eastern Sacramento. New York City. Love it. We got a good geographic distribution. More Trinidad. Finally got somebody down under. There we are. Southern Cal. All right, who's ready to Hong Kong? Awesome. Who's ready to get ready to be like taking some trades? Canuckland. All right. So, real quickly, anybody brand new in here tonight? I think I've changed some of the brand new folks off, but I'll get them back because you guys are going to talk about what's happening. Tulsa. Oklahoma. There's only two things from Oklahoma. Officer and a gentleman. I'll never forget that. Poland. Seattle. Ready to fall off. Everything west of I-5 is going to fall into the ocean. Zoe, welcome down under. All right, first live, but you've been in the recordings. First time, okay. So we're gonna go what seems like a little bit of a fast pace here tonight, guys. But you can catch up on the recordings, and don't worry, there is a master plan at play. My dog thinks so. And so what we're gonna do here shortly is there will be a bonus PDF at the Pitchfork site, which will essentially bring everybody current, and therefore we'll be able to just get in and look at charts and look at pitchforks and create pitchforks. A lot of Trinidad in here tonight. You guys are rocking. All right. So I need the chatter to slow down just a little bit in the group. All right, I need the chatter to slow down a little bit now. So I reserve it for people who have questions, and so I could get group answers to my questions. So try and avoid the trader to trader chat, okay? And let's hold off right about now. The first thing I'm going to do is go ahead and put up our information sheet. So for those of you brand new or haven't caught this before, make sure you take a screenshot of this. Don't be asking me 5 minutes, what's the name of the group again? It's right there. Oh, I believe there's sound. Somebody tell Rainman that there's sound. All right. So take a screenshot of that. Let's move on. I think most everybody's gotten in there. I'm going to put trade calc on there eventually. If you haven't gotten trade calc, it's in the iMarkets Live Scans, Forks, and Fibo group. All right. So quick review, 30 seconds here. I'm an educator. I'm not an investment advisor. Okay. I'm not going to give you a whole lot of specifics. I'm going to give you ranges of scenarios and explain why. And then it's up to you to make your educated decision about what you want to do. We've reviewed trade calc. This is important for position sizing. This is getting you in preparation for trading. So if you haven't downloaded trade calc, you need to get it. Guys, some of us are starting from scratch in here, okay? So I don't want you bringing bad habits to what we're doing in here. We're going to be doing very tight trades, very small stop losses. You have to understand what we're doing. You can't bring your old entry mechanisms in here. Don't come to the new paradigm from the old paradigm dragging your garbage. I know your ego wants to protect it. Your ego wants to tell you, oh, you spent all that time and effort and money and now you're not going to use it. If you mix the two, it's not going to work. You can't mix the old paradigm and the new paradigm. So we kind of used the IML harmonic scan on MT4 and the money management provided to validate what trade calc is doing, kind of a bridge so you would trust it in what it's doing. And the whole purpose is to trade by risk in the trade. Don't trade by number of lots in the trade. Yes, eventually you have to calculate the number of lots, but we don't talk about, oh, I've got 4 lots on that trade. Oh, I've got 0.13 lots on that trade. It's risk. We trade by risk. We calculate risk using the size of our account, the type of the account, how much risk we want in the trade, and our stop loss. And from that, we vary. Tim, make a note so we can get him trade calc at the end. We'll post that link for you as well in the chat at the end of the session. Just remind us if we forget. All right. So last week we went through this list. It took us about an hour to go through this list. We talked about line thickness in your charts. I think everybody's corrected that. Thank you very much. The administrators and coaches in here appreciate that. We talked about getting the structure right, but the fork being wrong because the angle was too steep. The middle of the swing has to be above or below the 50%. So if you've got the right structure in terms of swing low, swing high, or swing high, swing low, swing low, you can still have the fork wrong because of the angle. So if you have any questions about that, just look at the forks. I mean, quite frankly, I don't need to teach that anymore. None of the administrators or coaches need to teach anymore. You know what? Just go through the group and look at the forks. And you can see people who were trying in their first shots, they threw something out there. Bless them. God bless them. Kudos to them for having the courage to throw something out there. That's how you're going to learn, by learning what not to do. But you'll see plenty of examples where they have a good structure, but they point it the wrong way. And they've been corrected on that. Now they're getting it right. That's how you learn. But you'll see enough of that to where you don't even have to see it in the videos. You don't have to see it in here. You can learn from that group. That's what the group's for, guys, is to learn from other people. We talked about don't mix the old paradigm with the new paradigm. We talked about don't always worry about being a purist. And man, I'll talk more about that as we move on. Give me 1 second. I gotta clear my throat. Test, test. Okay, I should be back. We talked about pips over purity any day, meaning we're going to talk about some things with pitchforks that are a little different than maybe some other pitchfork drawers do, but that's because they're in the old paradigm, we're in the new. We talked about trade postings, getting the pair right and the numbers right at the top. It's like trading a mine, crossing a minefield. If you got the instructions to cross it, you got the footsteps in front of you, just follow the footsteps. Don't be lazy and don't try and create something new on your own. That's just ego. Overall trend, stick to the bigger one holding, too many short-term forks. What I mean by that is sometimes y'all are too zoomed in and you can't see the bigger picture. Let's look at the bigger picture first, then you could zoom in. Okay? We can't skip the most current swing low, swing high, or half swing low, swing highs between swing low, swing highs and call that traditional. It's not. We talked about as far as getting touches to count the fork as being validated or proven. We can't count the touches on the swing of the fork itself, even though they might look good sometimes. Later on, they might help prove the median, but as far as the fork, they're part of the construct of the fork, and we can't use them as touches. The touches have to come inside. All right, many note takers have talked to me and PM'd me. I thank you guys who have. Whether you're able to help or not, I appreciate you stepping up. And we talked about fork structure and how to use a pitchfork are two different things. So what we're talking about that is, again, many times you guys are coming in way too tight and drawing a fork, and that's okay. Nothing wrong with that. For those that have not watched the video I put up this afternoon, I realize it's short order. Many of you are coming home from work or just waking up or whatever. But I posted a video this afternoon for the entire group membership. Doesn't matter where you are or what you are. And that's going to bring some clarity to the approach to using forks. It's simply a move it forward concept. If I have a new swing, I draw a fork. If I have a new swing, I draw a fork. Now, not every tiny little move. I'm talking about swings per the period that you're on. All right, so that's a quick review of all that. If you want the more in-depth review, watch the recorded last session. Okay. All right. Now, new material. Here we are, new material. We're only 15 minutes into the session. I think that breaks a record. So let's talk about new stuff tonight. All right. With pitchforks, we do not chase trades. This is different than the old paradigm, guys. This is why pitchforks are so, new and special and create the new paradigm. We don't chase trades. Now, chasing trades involves at some level guessing and hoping. There's no precision. Oh, here's a support and resistance zone and it's 50 pips wide. So you have to include that in your potential. You have to potentially use that a stop that exceeds that zone. And you don't know what the hell's going on when price is in that zone. When you are trading with hope, you're creating emotion and you're bringing ego into your trading. And as I will continue to repeat, ego and emotion are the worst trading partners you can ever have. The old paradigm fosters an environment where you bring emotion into your trading. The new paradigm removes emotion because the precision is there. Draw pitchforks on swings as they move eastbound. Again, the video today highlighted that. I encourage you to watch that video. We're looking for existing and persisting longer channels in front of you. In other words, when I get on the charts, I want to look west. That means left. I want to see if there's any channels there. So you have to zoom out. In whatever time period you are, you got to zoom out. If you're on the IML web scanner and you got a scan that comes up and it's taking up half the screen, I'm going to tell you, you need to zoom out till you get about five patterns wide at least. See what's happening before that scan. See if you can draw a pitchfork that hits any of the elements, A, X, A, B, C, while you're waiting for the D to materialize. And as we demonstrated the past few days, don't worry if you get that trade or not. It'd be nice if you can, but don't worry if you don't get it, because the resultant forks you draw because of that scan, because those swings are super swings, because of the amount of Fibonacci in them, don't worry about missing that trade if you can't get it. That scan will still give you multiple trades. And the advantage now we're going to talk, a little bit dirty here. The advantage of having your own trading view charts is you can copy that scan to your trading view charts. And if the scan is overrun or it's short and the IML scanner makes it go poof, you still have that scan. You can still benefit from a scan that's been removed from the system. All it means is the purity of the scan didn't work out. It doesn't mean that all the great Fibonacci-ness that exists there is gone. So, very, very important to understand that. We can kind of we want to take advantage of that scan, but as far as the D entry, we could take it or leave it, because as long as we repurpose that, scan by drawing pitchforks based on that scan, you're going to get more trades. Trust me. It's that checkmate zone. And if we have to wait for the scan to come and, the D be satisfied or not, well, guess what? We'll take advantage of it. We're going to get trades. So always look for existing and I was really happy. I saw a post. Sorry, excuse me for not remembering who it was, because there's hundreds of them in there. Now somebody had posted they had been working and they built a long-term fork. They found an existing persisting channel and they put a fork on it. And lo and behold, just as I said, the magic woo-woo appears on the charts and poof, there was a scan in their pitchfork with some points of contact. If you have a channel, the swings and it's persisting, what that means is it's continuing to move eastbound, either up or down or whatever, and it's continuing to have price constrained in that pitchfork. If it's a good pitchfork, if it's a proven pitchfork, and you're getting hits on it, that scan will have to by default fall inside that pitchfork. Now some pieces of it may fall out. Parts of one of the wings may fall out. That's okay. Don't worry about it. We're just worried about the pieces that fall inside. Because see, that's another point of validation for the fork. And quite frankly, there's nothing more exciting than having a fork on your chart and you go check the scanner a half hour later and it puts up a scan and you look at where it is and it's smack dab in the middle of your fork. It will, it's like I remember the first time I found gold in a pan. I go up to the Sierra Nevadas, the old California mother lode from the gold rush. And, whenever you get shiny in the pan, oh my God, it's so cool. You're touching a piece of gold, a precious metal that no other man has touched for millions and millions of years. It is precious. That's why it's a precious metal. It is absolutely precious. And when you have the eyes and you build out that existing and persisting fork and the scan falls in it, you will have that feeling. Adjust your forks as necessary per time period. Anytime you have a best fit fork, the day is not done. Don't get the attitude because I or Tim or Zoe or whomever, one of the administrator coaches, if we say, oh, that's a good fork, you're not done. As time moves on, you have to adjust that fork. Don't just, oh, Steve said it was good. So you have to constantly adjust them. You have to look. And you might have to wiggle it, 1/10 of a, ant leg. To bring more proven touches. One comment on that, I think somebody asked this question. It's worthy of repeating in here because it was a good question. And essentially, they didn't have any inside-outside touches, but they had some great Fibonacci touches. Yes, you can align a best fit fork with Fibonacci touches. But remember, Fibonacci touches are more about smaller term trades. They're not in the time period we're talking about most of the time. Unless, what? Unless they're an energy point created with something else, like horizontal Fibo or a fork Fibo. But you can use Fibonacci to get the angle of your fork set and then see if you get inside-outside touches, median sets, upper parallel, lower parallel, to confirm. I don't know the sound issue. I wish I could help people that are having issues with sound. If you have a lot of memory going on your computer, you're running a lot of applications, what I would recommend before you come in here is shut everything down. Facebook on a computer is a huge memory hog. Even email programs, Yahoo, Gmail, they're memory hogs as they stay on your computer as long as your computer stays on. Is the screen showing anything else aside scan, forks, and Fibos? I'm not sure. Well, we should be all using the same tool, and the broadcast should be the same for everybody, so I don't know why session to session it would change. All right, I said trading forks was not like the old paradigm. Here's why. Remember, most of you at some point or another may have been in a network marketing company on the actual marketing side. as a business builder. And one of the things your upline will tell you when you start crying about a particular recruit that didn't work out, first of all, go build your list and don't worry about the ones that say no. Move on, right? But a good upline will help you out by saying something like, some will, some won't, so what? It's a numbers game. We've talked about the farmer planting his seeds. He doesn't know which seeds are going to germinate. Some are going to get blown away. Some are going to get baked by the sun. Some are going to be overwatered and drowned. Some are going to be picked out by a bird as soon as the bird sees it. And, who knows what the statistic is per crop, but, maybe 5 out of 10 make it, maybe 3 out of 10 make it. And the farmer doesn't know which one is. He doesn't know which of that 10 is going to make it. So he just plants them and treats them all the same. Some are going to germinate, some aren't. Some will, some won't, so what? Forks are the same way. Do not confuse the old paradigm. Now listen, this is important. Do not confuse the old paradigm way of investing emotionally in a trade with the new paradigm way of using pitchforks the way we teach them. Because if you draw a pitchfork and the fork doesn't deliver, did it cost your account any money? No. If the price moved right through the upper parallel as price was moving north and it never stopped to breathe and it never reversed, there was no trade. Now the opposite occurs in the old paradigm where you're doing entry orders on certain zones. Maybe a Fibonacci falls smack in one of those 4-hour support and resistance zones. And so you put an entry order in that area with whatever size stop loss, depending on time period. 100 pip stop loss or bigger. Price gets into that zone, your trade's triggered. You are locked in now. You're either going to win or lose. There's emotion attached to that. But a pitchfork, it's only a trade when it hits the boundary, and the tighter it hits, the higher percentage trade we have. If it hits it to the pip and it pulls back, you have a trade. If it's 7 pips short of the line, you don't have a trade. I'm just talking. Nothing's going on right now. I'm not showing a video. Should be able to follow along my speech here or my talking here with the bullets on the screen. I'm down in the last bullet set paragraph. So an old paradigm entry order that didn't work out did cost your account money. This is a very big distinction. Now there's two big psychological things that go on with these two paradigm differences. In the old paradigm, when you set a trade and it doesn't work, that becomes part of you. You decided the trade. It was your decision. It was your setup. And therefore, when the trade fails, you take an ego hit. And ego hits require emotion to overcome. They also readjust your RAS to the negative. This is one reason why the old paradigm works against you instead of for you. In the new paradigm, with a pitchfork, I draw a pitchfork. I've got it all set. I've tweaked it as time has moved on. I've got perfect touches on the median, top parallel, lower parallel, and price comes along and it blows through one of the parallels. There's no trade. Oh well. It did not cost your account any money. And you know what? When you're using pitchforks, you are not making decisions. Price is merely interacting with the pitchfork and you're executing a trade, but it's not your decision. Yeah, you make the decisions to buy or not buy or to sell or not buy. That's not what I'm talking about. I'm talking about the analysis for the trade beyond the pitchfork already being drawn, whether price interacts with that pitchfork or not is not on you. And this is why if it doesn't work, it's no big deal. Maybe you have to draw 3 pitchforks that don't work for the one that does. Oh well. They are so profitable, it will be like if you were in 4 trades in the old paradigm and every one of them worked. Don't worry about whether a pitchfork works or not. And they're not on demand. In other words, a lot of skeptics will go, if they're so good, draw a pitchfork now. Explain what's happening now. Well, maybe I can. Maybe I can't. Pitchforks don't always work. But when they don't work, because price doesn't interact with it, price never engages with it, it doesn't cost us any money. And this is why, as a new paradigm trader, you're going to be much better off on the psychological side. I say this in my, outside IML group, and I'm going to say it in here as well. If you cannot learn to trade in the new paradigm, you're never going to learn how to trade in the old paradigm. The reverse is not true. And that's because you have so much working for you psychologically in the new paradigm that if you revert back to the old paradigm, the psychological toll it's going to take on you when you see how ridiculous it is, how it works on you negatively, you'll just give up. Okay, we can start now. Chris is ready. Just joking, Chris. There shouldn't be any attachment, emotional attachment, to any fork. They're just potential traps. They'll get hit or they won't. Don't worry about it. All right, now we're getting to the nitty-gritty. We're going to be talking about entries, stops, and a little bit more. So fork considerations for entry and stops. Y'all thought this was going to be easy. Well, it's not rocket science, but there are conditions. So your stop and your entry is conditional. And what I'm going to do here is review some of those conditions, and you have to decide. I'm not going to tell you that there's a right or wrong here. I just want you to be aware of the conditions. So I say common sense, common trading sense. For an upward fork, our preferred transaction is a buy, and we're going to buy bottoms. For downward forks, we're going to sell tops. Now, if you do the opposite of either one of those, you are growing your stop on retests. I'd love to make somebody else the presenter and ask them to draw that out for me. Here's what I mean. Let's talk about an upward pointing fork, which should be what? What should an upward fork be as a preferred trade? The preferred trade is the buy. It doesn't mean you can't do a sell, but look what happens when you do the sell. Price comes up, engages the fork, and pulls back a little in our favor. Where's our stop loss? Forget the amount of pips, but we're going to have a manual stop loss right outside that pitchfork. So what happens when we're trying to do a sell on an upward fork is we can have what we call slide. Price can be sliding. And every time it retests the pitchfork, that's valid. But if we were in this first trade at 1, we have not been stopped out because the red line is our stop. But when it's moved up to 2, it's increased our stop because our original stop was there at 1, and now our stop's up here at 2. So when you're doing buys, when you're doing sells on an upward fork, when it retests the top in a slide, you keep increasing your actual stop. You have to. Now, there are plenty of times where this will make sense, where you can do this. What would be an exception to why I would disregard this concept of buy the bottoms on an upward move? What would make sense is if I had a hit like that, but the hit was on a Fibonacci or a fork Fibo. At that point of intersection, that's now an energy point, and a sell would be okay. But routinely, here, we're better off with buys. What happens when it retests, when price retests the bottom in a buy? So we have a bounce down here, and price moves up some in our favor, and then it bounces and tests again. Well, the move hasn't been settled yet, but look at what happens. Here's our stop loss outside the fork. And at our first trade, there was the stop. We're still in that trade. We haven't left the bottom of the pitchfork technically. We went up a little, it came back, it retested it, but now our stop is here. So we're actually already in break even at the time of this second test. In the top, the second and third tests, your stop grows and you're farther away from break even. So ideally, we're looking for buys in the upward fork. Do I take sells? Yes, I do. They better be pretty well justified. And the exact opposite is true for the downward move. I don't have to go and draw that. Hopefully, it's understood. All right, so if we have an upward fork, we want to buy bottoms. If we have a downward fork, we want to sell tops. Otherwise, we're increasing the size of the stop loss on retests. We're adding more risk on the retests. If you go with this formula, upward fork buy bottoms, downward fork sell tops, you will grow profit as there are retests. Now, guys, just to let you know, this is nothing special about pitchforks. This is true for trend lines. This is true for any channel. So don't, oh my gosh, I gotta learn some more formula. Oh, woe is me. This is too hard. I'll just go and buy a $10 scratcher instead. If you're going to learn how to trade, you're going to have to learn this not just for forks, but for trading in general. All right, another consideration for your stop loss. Where are we time? Oh, okay, we're doing okay. To the pip. So if you've seen TTP and you didn't know what it meant, it means to the pip or incongruent breaches. Who wants to take a shot at what incongruent breaches are? Well, a breach goes outside the fork, but what's an incongruent breach? Okay, so good thing I asked because I need to define this. If I have a line like this, there's the top edge of my pitchfork. So we're going to be doing cells, and forget what I got going on in the median. Forget what I have going on the bottom parallel. Right now we're just talking about this. Well, you're getting close, Faith, but not quite it. So if I have a breach here that looks like that, and time comes on, and then I have a breach here that looks like that, and now I've got a mark. Now I've got a test of the pitchfork line, and I start to get a pullback on it. I actually have to have a manual stop loss that is out with the farthest breach. These are not, in other words, the size of the breach is not congruent. They're not equal. So there's no slider that both of these breaches can be attributable to. They're carrying different levels of, conformity. I'm going to fill them in a little because I didn't draw the lines quite right. Each breach is a different height. So if I have now an opportunity for a trade, guess what I got to do? I got to cover the most severe breach. Yeah, that's another way of saying it. They don't line up with each other as a parallel. We don't expect them to be equal horizontally, but they don't line up parallel. So an incongruent breach makes this very hard to trade. I can trade it, but my stop loss, instead of what the chart says that we're going to see next, my stop loss has to expand out, and now my stop loss has to be, on the other side of that breach. Which means now I'm covering a bigger distance. Which means what? This is less profitable as the sell takes place. My stop loss has to be increased for the trade. My profit goes down in the trade as it moves forward. Narrow fork or wide fork? We're talking about how we're going to be setting our stop losses. Look, if I'm on a 10-minute chart and I've got a pitchfork, or a 15-minute chart, as some of you may trade, and this entire fork is 20 pips, and I have a breach at the top, single or not, that goes, 5 pips outside the channel, remember, I have to cover that breach. And so now my stop loss has to be set as I get a challenge for an entry. Come on, pen. As I get a challenge for an entry because price comes up and it's now interacting with my upper parallel. In terms of stop loss, I got to go all the way past that breach. And depending on the size of it, it might not make the risk reward look profitable. And in terms of a fork, the target we have to look at is the median if we're coming from the top. Because it very well may come through, it very well may bounce. So to be conservative and practical, the median is about the biggest target we want to extend to. Doesn't mean it won't go further, just means for risk reward purposes, that's what we have to use. I'm not sure what you mean by stop loss is fixed. Our stop loss is always going to be a line. It's variable. It is never fixed. It's fixed in the sense that it's going to be that line. These are not set and forget trades. These are executed trades. They are babysat until we're break even. That's why you get to get the big fat profits. If you want to do set and forget entries, go back to the old paradigm. hope and wish and make 1/10 the profit per trade. No, misunderstood. We have two stops in our trading. We have a manual stop. A manual stop means what? When price hits that stop loss, we are taking ourselves out of the trade. At the time of the trade, you have to put something in the trading station. And that is going to be what we call our emergency stop or the trade station stop. So right here, I may have a stop that's 2 pips away from the parallel. I also have a 10 pip stop at the time of my trade that is right there. So as this trade comes down, even if it re-challenges here, I get to move my trade station stop up, so it's still 10 pips from the time of the trade. But the red line is a line I will always take myself out at. We never let our trades go up to our stop loss. There's only one reason you should be stopped out in your trading station on a fork entry. And that's because Nissan decided to do payroll right then. And there was a 20 pip spike. Or a 20 pip move that stayed that way because they impacted the market. So we will always take ourselves out manually, and we're going to take ourselves out as a percentage of our stop. And that's to minimize our loss, but to maintain our gain. Case in point, if I have a calculated 2% into a 10 pip stop loss, this is why trade calc comes along, it's going to give us X lots to put into the trade. That's position sizing. And what that means is, if I got stopped out, and we call that our ESL, or emergency stop loss, if I got stopped out because it went past 10 pips, I would lose 2%. It also means, as the trade moves in my favor, for every 10 pips of movement, I'm making 2%. Now that's the way it works in the old paradigm. Not so much the 10 pips, but 100 pips stop loss, 2%. If it backs up 100 pips, you lose 2%. If it goes 100 pips, you make 2%. We're going to one up the old paradigm yet again. And that is, we're going to have a tighter stop. Let's just say it's 5 is our MSL. So, excuse me, our MSL, let's say, is at 5. So now if price comes up and we take ourselves out because price touched that MSL, see, this is the character builder. You have to have the discipline. You can't, well, I hope it's going to come back, so I'll let it slide past my MSL. Wrong. You're defeating the purpose of being in the new paradigm. So if we take ourselves out at 5 pips, how much did we lose in the trade? 1%. But when we gain, every 10 pips, we're making 2%. So we haven't affected that ratio. We just minimized our loss. This is why it's a very low risk, high yield way of trading. Narrow fork or wide fork. The wider the fork, these two forks, obviously the width is different. And so it's going to be harder to be as precise in pitchfork number 2 as it is pitchfork number 1. Likewise, the length of the fork. If I have the same width fork, so this fork stays the same width, but I have a trade early on in the fork, the precision of the fork is much accurate in here in terms of this point matching perfectly than it is down here. Now, I'm really speaking of like when you're on the harmonic scanner. The farther you go down the fork, the less accurate it's going to be. And if you don't think that's the case, here's your litmus test. Grab your median someday and move it up and down, trying to make this hit perfectly versus trying to make this hit perfectly. This is much harder to achieve in putting your fork on. There's more flexibility the longer the fork. I saw an engineering study one day, or an article from an engineering study, and it said if you took a 50-foot steel rod and mounted it perpendicular to the ground so it formed a perfect 90 degrees, and it's 6 inches wide in width, and it's 50 feet long, that if a big old fat bumblebee landed on the end of it, it would bend 3 to 4 inches. So it's an example of how the longer the fork, you've got to give some consideration for that. So whether the opportunity is near the fork swing, the fork swing is always, I'm always talking about the swing high, swing low, or the swing high, swing low, swing high. That's the fork swing. It's the swing that the fork is based on. That's what that is. So the nearer it is versus far it is, the more accurate you can be early on, so your stops can be much tighter. Again, I'm speaking more so for the web-based system. Short time period versus larger time period. The larger time periods are going to have more slush. That's evidenced by the way the the way the web scanner will produce a scan and automatically set the stop loss. If you've got a 15-minute scan, you very well may have just a 20 pip stop loss on that scan. If you go look at the 4-hour scans, like I've studied them, they average about 150 pips for their stop loss. You have to scale up because the indicators and the way of measuring it in the old paradigm, there's more slush as you go up in higher time frames. That's why the stop loss always increases in the old paradigm. So the time periods matter too in setting your stop loss. A proven fork, even a traditional, that has 1, 2, or 3 inside and outside hits increases the odds of it being a successful bounce. Slush means there's a zone of potential for the reversal. I can't control it. That's why you have a 150 pip stop loss. Because you have no precision from your entry for however far back, whether that stop loss is based on market structure or whatever. There's too much slush in there. And that's because the indicators at that level don't flip fast enough. Okay, I'll give you the technical reason. Watch real closely. If I'm in the old paradigm and price comes to a swing low and starts to move up, it is a rare day, and I mean rare, hell freezing over kind of day, where you can enter that trade there in the old paradigm. Typically, where's your trade entry? Somewhere up here, isn't it? Why is that? Why is that the entry? Because at, let's say, the 4-hour level, let's just throw something like stochastics on our chart. So what ends up happening is I have the slower stochastic, and it takes a little bit more for it to start to make its turn. The faster stochastic, which is already crossed down up here, is down here, and now it slowly makes its way, and finally it crosses. This, my friends, is called slush. Because technically the bottom was down here, but we don't get the signal to enter the trade until here. And the time we enter the trade, because we don't have precision instruments, we have to cover that swing low based on market structure. That's why you have the 150 pip stop loss. Now, the smaller time frame you go to, the sooner this stochastics will flip. On a 10-minute chart, it's going to flip real fast. So we get to enter the trade here instead in the old paradigm. And maybe we only have to cover 20 pips to cover the previous low. So the indicators are scaled, and as you move up in time frames, they lag more and more and more. It's not about waiting for the impulsive move. This is the impulsive move right here. It's the indicators that you have to measure it are so slow. And it doesn't matter whether you're talking about moving average crosses or stochastics or RSI or whatever you want to talk about. There's more slush the higher up you move in time frames. That exists a little bit with pitchforks, but not nearly to the extent it does with any other indicator. Just a little with pitchforks. Now, where it's going to become evident, let me move on here because I'm going to show you where that becomes evident. So short term versus long term. Proven fork, outside hits, inside hits, increases the odds of it being a great trade. And then always do the math. Look at your risk reward. I gave that example earlier of the narrow 10 pip 20 pip 10-minute pitchfork where we breached it by 5 or 6 pips. That's not a trade. It's too wide of a breach to cover. By the time we do our risk reward, 2 pips of pullback, we barely have 1-to-1, and we're not going to take those trades. So that's why the breaches are not. Oh, if it breaches by 3 pips, can't say that. Depends on time frame. All right, let's look at the settings. Let's look at this. So you're going to take a screenshot of this and study it between now and Monday. Let's look how to read this. Tell me when you see it. Okay, I see it, so you must be able to see it. And don't worry, again, this is all going to be put in a PDF and available at the Pitchfork site until I could get it in an IML Academy site as a video. We'll have a bunch of short videos with cheat sheets. And those will be crisp because they're homemade MP4s that I could record in super high resolution, and they'll be put into the IML Academy in super high resolution versus it being the fuzzy screens like we get in IMLTV. So let's look at the left side. I've got 2 major categories. One is the IML harmonic scanner, the web-based scanner. And the second one is TradingView Pro Plus version, 1 pair per layout with visibility on. We can do our entries on a 1-minute chart. So if I have a 30-minute pitchfork, if I have a 30-minute scan that comes up on my harmonic scanner, I cannot change the time period of that scan. If I could copy that scan over and bring it down to my 1-minute chart, which we can very easily, I can see precisely where it is. More so, if I draw a pitchfork and I bring it over, we can see, when I say bring it over, we turn visibility on. Now, give me 1 second because I messed up here and I forgot to add a slide. Let me pull it over. And I got to act fast here, so I don't want to increase questions. Give me a second here. Oh, I already blocked it out. I did have it ready to go. I just didn't bring it over. So tell me when you see the red pitchfork. I'm trying to move as fast as I can here so we could finish up. All right. So what you see here with this red pitchfork is it's drawn on a 30-minute chart. So let's say I have a 1-hour scan, and I copy it to my 30-minute chart, or I could just do it on the 1-hour chart. But let me just talk about the pitchfork for a second. So I have a pitchfork here. This is a 30-minute chart. So it's a 30-minute pitchfork. I have TradingView. I have a pair within one layout or one group. I can turn visibility on. It's just a toggle on this pitchfork. I can turn visibility on. That pitchfork is automatically duplicated precisely to my 1-minute chart. And now I have real clarity on what's happening here. Look at that to the pip. That is a to the pip touch. That's why we look for that. I can see it here. I get 2 pips of pullback. And at the time I entered, sharpen my pen. At the time I entered this trade, oh, come on, Steve. Thin. At the time I entered this trade, the pullback, even though I went for 2 pips, was about 3.2. So in 3.2 pips, I was in that trade. So that's what visibility will do for you. Well, I don't have I'm already spending money on my membership. I don't have the money for that. $29 a month at the highest cost. You can buy annual contracts and get that down under $20 a month. And the difference between getting in a trade with a 10 pip, 3 pip, 4 pip entry here and taking a typical old 30-minute trade where I have a 20 or 30 pip stop loss means I'm going to make twice the money in this trade. And every trade. Well, I don't want to spend the money. Well, this allows you to have 10 pip stop losses. Over here, you're going to be sitting here with 20 pip stop losses. You figure out what you want. So there is a reality that comes down to the trading world in terms of the harmonic scanner and what it can deliver, especially because all of the scans are what? 1 hour, 4 hour, and now they have the new tab, 15-minute. So if I have nothing but the web scanner that's going on, which time period do I want to trade? If I only have the web scanner, I don't have TradingView charts. I only have the web scanner to work with. Which time period do I want to trade? Absolutely. 15 minutes. Because I could be in super tight. Yeah, but the 1 hour trades get so many more pips. Oh my God, please don't say that. I'm going to take the pound yen because it really moves. I'm going to take the pound yen on a 1 hour chart with your 40 pip stop loss per the scanner. And we're going to make 4 times the profit. I don't know how many trades, you know. Yes, with the accuracy of the trades, the charts will pay for themselves just on a weekly basis, maybe probably on a daily basis once you get moving. It's not even a joke. Bigger pit movement doesn't mean more money if you have to have a bigger stop loss. My accent. I'm going to learn an Aussie accent. I'm going to watch. I've seen the trailer for it so many times. Was it Rough Night with Kate McKinnon from SNL, and she does the Aussie accent. It's so funny to watch her do it because it's so fake, but it's funny. So we have a different reality depending on whether I'm just on the scanner or whether I have TradingView. And I illustrated here the Pro Plus version. The Pro Plus version lets you have 10 groups or 10 tabs or 10 layouts. They all same thing. And within that 10 layouts, you can have up to 4 charts. So I have a tab. There's 4 charts in that tab. Up to 4 charts in that tab. And I could turn visibility on. So what I see on my highest time frame chart, if I have a 4-hour chart, better said the way I like to call it, if I have a 240 chart and a 30-minute chart and a 10-minute chart and a 1-minute chart, I could turn visibility from my 4-hour pitchfork onto my 1-minute chart. So I can have a very tight entry. Now again, I'm not telling you what to do. I'm pointing out the math, and you get to make your own decisions. But I'm going to point the math out to you, that's all. So now we have this matrixed in a couple of ways. We've got, for both harmonic scans and TradingView, we have 10 to 15 minute pitchforks. These are pitchforks on 10 to 15 minute charts. We have pitchforks on 30-minute charts or 60-minute charts per the scanner. So on the harmonic scanner, this would be a 15-minute scan, this would be a 60-minute scan, and this would be a 240 scan. Daily's out there, but I'm going to keep coming back to why. And it makes no sense because you could trade even 240 trades up and down and smoke what you can do on a daily basis. Get your mind away from the big moves. Not that you won't catch some, but again, for the amount of stop loss a traditional trader is going to have in that, like I said, the scan on a 4-hour basis typically recommends 150 pip stop. I think technically it was 148.2 as I did my study. 148.2. Let's just call it 150. And we can get in that same trade with a 10 pip stop loss. We're going to make 15 times the profit. Same amount of pips. Same risk. Same account balance. Same size account. We're going to make 15 times the profit. So go trade scans if you want. Trade scans with Pitchfork and gain some precision. Down below for TradingView, it's the same deal. I got 10 or 15 minute charts. I got 30, 60 minute charts. I got 240 and I got daily. So these two zones, the top two, 1, 2, is where the comparisons take place. Now within them, we kind of have a better and worse scenario. So on our web scanner, the entry is going to be on the same time period as the scan. The trades that are narrow, the pitchforks that are narrow, the pitchforks that are closer to the swing on your harmonic scanner, you can use 2% into your 10 pip for calculation for lots, and you can draw a 3 pip line outside your pitchfork. As that creeps up to your 60-minute scan and a 60-minute fork, you can you're going to have to creep up your stop loss a little because you just don't have as much advantage on this harmonic scanner with scale. As I go to the 240 trade, I better at least calculate my lots, my 2% for position sizing on a 20 pip stop loss. And you could put a manual stop loss 10 pips outside your pitchfork. If the pitchfork is wide or the pitchfork is far from the swing on my 240 trade, I have to expand that 10 pip line to probably about 20 to allow just the variances in slush at the higher level. And again, I do have numbers here. I just would totally discourage daily scans. So now you'll notice the numbers sharpen up as you come down to TradingView where you have your own charts. And I can turn visibility on those higher time frames to pinpoint the entry on a 1 minute chart, just as I showed you. You're still going to have the same two categories. At the very lower end, there's not much difference between the scanner as your chart versus TradingView. 10 pip stop loss for both, a decent narrow close to swing, 3 pips up here, we're 2 pips here. So we gain a little pip. Our stop loss is a little tighter. Still calculating 10 pips for the 2%. As this fork gets a little sloppier, 10, 15 fork, we have to expand it here. We're going to expand it a little here. We're still a little tighter. But now let's go to the 60 minute, 30, 60. We're starting to see the difference. I have slush I have to deal with on that scanner because my scan comes in on a 60 minute chart. There's slush there. So I've got to open up my calculated stop a little, and I've got to open up my manual stop loss a little as well. Down here, we get to keep it just as tight. So we're going to make 50% more in this trade. You have 15%, 15 pips for your 2%. I got 10. So for every trade, I'm going to make 150% more than you. Plus, when I lose less. Because I'm only losing a fraction of those 10 pips. You're losing half, almost half of your 15 here. Okay. Alex, you'd have to have a variable on that to determine it. It's just easier to draw it. Because as Tim says, 103% on a 10-minute chart or a 15-minute chart is a lot different than 103% on a 240 chart. It all depends on the width of the channel. So that's kind of the difference between a scanner entry and a TradingView entry. All right. I got 3 extra considerations down here that fall aside. Doesn't matter which one of these I'm on, but that I have to consider. If I have breached pitchforks at the lower level, I have to treat it as a more risky trade. Not that it's risky, it's just not as clean. The pink is not as clean as the blue. That's all there is to it. I have to consider this, and I have to expand my stop loss. It's variable 3 pips beyond the breach. When I get to the 240, it's a little bit more. 5 pips beyond the breach. So guess what? The bigger the breach, the bigger my stop. If a breach is by 5, I've got to have an 8 pip stop loss. If it breaches it by 3, a 6 pip stop. If it breaches it by 10, a 13 pip stop loss. I'm going to be 3 pips on the other side. Guess what that's just like? Right? So it's just a way of saying my stop loss increases. I still want 3 pips on the other side of that breach. So I have to draw a parallel line on that breach, bring it forward to my current trade. Even if my trade is bouncing off the exact upper parallel, I have to know it might have a chance of going to that breached parallel, making it a slider. And so I have to put my stop loss outside of that. Well, yes, it does increase your stop a little bit more if the channel's wider. But tell me the difference now between a 10 pip fork and a 240 fork. I mean, it's just extra work. I mean, it doesn't mean you can't do it. It's just extra work. We don't worry about spreads. You know why we don't? Why don't we worry about spreads? Why don't we worry about spreads? We trade from the charts. We do not trade from our trading stations. Quite frankly, not only does the market care less whether you're in the trade or not, the market doesn't care less where you got in the trade. We trade charts only, and I'm not talking about the trade station off the charts. We trade the charts only. We draw a pitchfork. We have a manual stop loss. For some people, that manual stop loss might take them out at -3. For some, it might be -5.2. We cannot use spread in our calculations. Don't worry about spread. First of all, you have to be very good at understanding what kind of chart you're on. Are you on a bid chart or an ask chart? Are you on a chart that averages them out? On a bid chart, your buys, you don't need to adjust the stop loss. On a bid chart, you have to add your spread to your sells and your sell stops. Trust me, I've taught for 13, 14 years. 90% of the traders cannot get it right when trying to calculate exactly which way the spread needs to be added to their trade. It depends on what kind of chart you're on, whether it's a bid chart or an ask chart or a hybrid average. So we're not going to mess with that because it's going to be different for every trader. Every broker has different spreads. Some have small spreads and commission. Some have small spreads if you have a large ass account. Excuse my language. Some have high spreads because they only have $200 in the account. So there's too many variables to try and bring it to a system for how to set your stop. We're not worried about losing, guys. Don't worry about your loss being 3.2 versus 4.7. It ain't 100 pips. Well, this is why if you're doing it properly, so the question is about adjusting the ESL. If you're doing this properly, as you move into profit, your stop loss should be moved with you. Your emergency stop loss. You don't have to move it every tick. Remember, it's only an emergency. Let me ask you this. How many times have you been on the chart, out of all of the times you've been on the chart, and be honest, has there been a time where price moved so fast that it overran your stop? I'm not talking about, oh, it's 2 pips away and it overran it. I'm talking it's 10 pips away. I didn't ask you if it happened. I asked you for the percentage of times that it happens. You're going to have to send me screenshots. I've been trading 14 years. It doesn't happen frequently. The reason it happens is because you don't have a stop that's proper for what you're trading. I'm telling you. It's very, very seldom. If it's happening to you often, something's not right between your trading and where your stop is set. Yeah, unless you're on the pound yen all day. Then those wicks are going to get you. My point being, you're going to take yourself out manually. And that's why you require discipline. But even if it gets to your 10 pips, that trade is really gone. But if you let it get to 10 pips and your trading station take you out, that trade was already over. That trade was over long ago. We don't let our trade stations take us out. We're wasting money by doing that. And unlike the old paradigm where that's what you have to do, you stay in that trade until the stop loss gets hit. That's because, as I said, you're using lagging indicators and you have too much slush and you don't know where the hell price is going, so you have to let it go that far. When we get to that red line outside the pitchfork, the trade is over. We're done. Another day, another pitchfork. But we don't worry about it because it's only a couple pips. We'll make that up in the next trade. See, again, you're forgetting. What you're doing is you're bringing your old paradigm thinking to the new paradigm. You're worried about getting stopped out. In the old paradigm, when you have that 150 pip stop loss and price is coming back, you had your move up and you entered and you're covering all the way down here. When price reverses on you after your entry and is dancing around down here, you have no idea what's going on. And quite frankly, you have to stay in that trade until price would come down and engage your stop loss. It could come 3 pips away. It could be down here 147 pips, and you're still staying in that trade hoping you're going to earn back 147 pips before you even start making 1 pip. That 147 pip erosion you have to overcome just to get back and make +1. And the reason you stay all the way down there is because this is the slush that you have. You don't know where price is. You're covering the previous low thinking, well, if it goes lower than the previous low, it's a reversal. But anything short of that previous low, I have to stay in because it may go up. We know when it comes back a certain amount of pips from our entry, it doesn't do us any good to participate in this drawdown. There may be another entry somewhere down here. We very well may have a set of warning lines down here that we could take a bounce off of and re-enter that trade. And now while you're just trying to recover your erosion for 147 pips, we just make 10, 20, let's say 30 pips. We just made 6% on our account getting back to 0, and you're only at +1. Or 0. You're starting at 0. We're starting at 6. We don't participate in drawdowns. That's why we exit really fast. If there's another legitimate trade opportunity, we should have a signal for it. If I have a proven to the pip with external sliders, it's going to be the same as blue above. So whether I'm in a harmonic scan, somebody at my door, whether you have a harmonic scanner as your chart or you have trading view as your chart, just use the blue lines here if I have proven to the pip external sliders. What is an external slider proven to the pip? It means I already have my pitchfork and I've had a breach. So price has come up and it's breached my pitchfork. It's come back down. It's breached it again. And I copied the top parallel. I clone it, whatever language you want to use. Roxy, hush. And I put it on those 2 points. And that parallel line from the upper parallel hits those 2 points perfectly. Now, on the third attempt at hitting it, okay, at the third attempt at hitting that line, I can treat it as if it's just a normal pitchfork bounce. Because that breached point has become a slider that's proven. It bounced once, it bounced just like a trend line. Well, it is a trend line. And we always know I could take the trade on the third hit. That's why this is nothing new. Yeah, tell Roxy. So if I have a proven to the pip external sliders, so I have at least 2 touches to validate, it's like a trend line. Same thing with warning lines. Warning lines are calculated. There's a little bit of Fibonacci-ness associated with them. We're bringing the woo-woo of the fork to a specific point on the chart. Warning lines can be traded on the first bounce. But again, same considerations. If it's to the pip, I have a very tight entry. If it's breaching that warning line, I'm not saying don't take the trade. You just have to increase your stop and the probability goes lower. So what I want you to do between now and Monday is study this chart, make your list of questions, and enter them in the group Monday before noon Eastern, i.e. 6 hours before this session. That'll give me a chance to see the questions. If I have to have a graphic example, I'll have time to draw one up. And then we can have our session answering the questions. Now, if I've already answered the question in this session tonight, I'm just going to tell you to watch the video. So I hope you were here from start to end. Look, guys, I'm committed to you. I ain't bragging, but I challenge you to find another educator that gives you the time I do. Yeah, I created an hour-long video for today. I already had that slide because I've been talking about using as an example. I still spent about 30 minutes crafting out the script. And now I'm in here an hour and a half again. I know a lot of sessions, the trainers don't show up until 15, 20 minutes into the session. And they don't go an hour and a half. So I keep trying to give because I'm trying to make it happen for you. You need to at least match my effort. My Lord. Because we're going to create some super, super profitable traders in here. Like not seen anywhere else in IML. That'll bring attention to us after a while, and you guys will then be the coaches and the founders of this group. All right, so this chart will get a little bit better as time goes on. It will always be continually updated at the Pitchfork site once I get my master PDF together for everything that we've covered in here outside of the training classes at the Pitchfork site. We will have something that essentially brings what we've done in these sessions to the Pitchfork site. So anybody brand new can then go through the Pitchfork site, have all of this stuff, and obviously it'll be condensed a little, but they have a starting point, and then they can come into any session live, and we will be doing the same things in those sessions. We're going to spend 45 out of the 60 minutes looking at charts, 15 minutes of social and catching up and reviewing some new techniques, but we're going to bring each one of you who's willing to play the game to mastery. But you've got to just two things, right? You got to stay plugged in, and that means do your work, stay current. And then you have to do what? Persist without exception. Don't let the little obstacles blow you out of the water. Don't let the little obstacles blow you out of the water. I will teach you more about trading in the next 6 months than you might gather in 5 years of your own time. Because I know what not to do, and I could convey that to you. Persist with perspiration without exception. There you go. All right. All right. So guess what we're going to do on Monday? We're going to review this table. We're going to take aside any questions, and we're going to do our money management. And then you're ready to trade. I'm looking at a third time slot. I'm trying to find something that works. My problem is the schedule is pretty damn full. But what I'm probably going to do with the third session is it's going to be a mindset session. It's going to be how to grow your psychological side. Somebody type in fxtraderscalculator.com so those that are looking for the trade calc can get it. So there's the group. Well, thank you. Pursue Your Vision. I like the name there. You can find the link in the group, or you can go directly to fxtraderscalculator.com. And I'll attack it from both sides. I'm going to attack it from the math in this group. I'm going to show you why you're going to want to trade pitchforks and how it evolves your mental side. For the people that come to the mental mindset, I'm going to cover the things on how to grow your mindset, but a lot of them are going to be right in parallel with what we're doing. The greatest way to grow your mindset is what? Tight stops, low risk, high yield. The greatest way to grow your mindset is to be able to trade robotically. You do the same thing at the same situation every time. This is why you have standardized stops. This is why you have a standardized entry. It's why you have standardized money management. You are a robot. When you're a robot, you don't take on emotion. When you don't take on emotion, you're not the decision maker. When you're not the decision maker, your ego goes away. It doesn't bother you anymore. It doesn't want to be around because you've told it you're not going to let it be in charge. None of that happens in the old paradigm. Every trade with a big stop, you're inviting ego and emotion to participate with you as a trader. Every trade you take, you're second guessing whether you did the right thing or not. Everything in the old paradigm works against you succeeding. That's why it has such a high failure rate. And we're going to have the highest percentage of winning traders coming out of anywhere in the world, nonetheless IML. Your ego fights. Your ego doesn't want you to trade like a robot. Because your ego says, oh man, you've invested all this time, you've invested all this money, and you don't get to make the decisions? Because your ego is going to fight you. Your ego wants to stay in control. Yeah, Mr. Ego, you're absolutely right. I do not want you in control. I'm going to trade robotically so you have no influence over what I do in my trading. And the more you trade pitchforks, and the more you trade with the tight stops, and the more you trade robotically, same thing, same situation, same action every time, the more you slowly hold the cross up to the vampire. They don't want to be around you anymore. Your ego will leave you. And that's a good thing. And let me tell you something. Here's the bonus for all of that. For the traders that have hung with me, really hung with me, now some say they are, but they're not following everything I ask them to do. Again, you have to figure out why that is. Some of it's life intervention. I get it. But the more they follow what I do, the emails that I get has nothing to do with trading. Because as I've said before, your mind, just like your personality, it's rare to be able to compartmentalize it. If you defeat your ego in your trading, you'll defeat your ego in all aspects of your life. All of a sudden, the relationship with your wife or your husband gets better. You're not interested in winning arguments anymore for winning the argument's sake. Now, my group has heard this 1,000 times. I keep telling them about my first marriage and wedding day, and my granddaddy comes up and says, I got one piece of advice. I'm just going to ask you a question. Do you want to be happy or do you want to be right? My advice is be happy. Don't try and be right. Because when you're right, you're going to end up belittling your spouse. You're going to end up making her feel inferior. And when you're happy, you're making her feel significant. And you can only do that if you dismiss your ego, because your ego is going to want you to be right. You know how many husbands tonight are sleeping on the sofa across America, across Australia, across Germany, Poland, Hong Kong? You know how many husbands are sleeping on their sofa tonight, staring at the ceiling with a big smile on their face because they won the argument? They won the argument. And they'd rather be right than happy. So you can't compartmentalize your ego, guys. It'll permeate your life. It'll help your relationships, and that means all of them. Spouse, parents, children, siblings, neighbors, co-workers, bosses. You can't just selectively turn it off and on. Once you learn to control your ego and the benefits you get by getting rid of it, wow. It'll affect you financially. It'll affect you health and wellness because your ego is gone. It's like an exorcism. So, hang with me. You're going to be a very profitable and consistent trader. You're going to get your financial freedom goals. And we have a lot to learn. I got so much for you. Now let me tell you what's going to happen to you guys that come next week. I got some real nice presents for you. Some real nice presents. I'm going to give you some technology, part of which has taken many years to evolve. I've got a support and resistance system I'm going to give you guys. That's going to blow you away. I mean, blow you away. I've got some money management that's going to blow you away. All of it settable with alerts. Entries by alerts, exits by alerts. Really good stuff. So hang around. Homework, study this chart over the weekend between now and Monday. Get any questions in about this chart by Monday noon. Don't ask me to represent tonight's session. You'll already have that. You can do that yourself. Just watch it a second time. We'll review it. We'll answer any questions. We're going to look at money management. And then you have enough to do some demo trades. We will use everything's already been done. You just have to look how far some of you have come in 3 weeks. Look how far some of you have come in 3 weeks. So we will go A to Z. We will calculate based on the account size, based on the stop loss, based on the risk. We're going to calculate how many lots to put into the trade. We are going to have the technology and the science down for how to do our entries. We don't process a loss here like we do in the old paradigm because our losses are so small. The first trade we have that goes for us will eradicate 50 losses. So we don't worry about losing here. And then we'll discuss the positive side when the trade goes. What's the most easy way? I didn't say always the most profitable. I said the easy. What does easy mean? It means we can trade it like a robot. We're going to trade the same way every time, accept the results we get, and move on to the next trade. Old paradigm, everybody assumes the last trade they were in is the last trade ever in the Forex. So they try and nickel and dime every pip out of it. They start over analyzing. Their RAS gets totally adjusted. That's the other thing. You know why you're going to be successful in this group within 3 to 6 months? Extremely successful. There's many of you way before that, but I'm just saying at the outset. You know why? Because your RAS is going to be so adjusted. Your RAS is going to be so adjusted, it knows what to screen in and screen out. That's what we're going to do with this training. I'm not really a Forex coach. I'm an RAS adjustment specialist. And I'm pretty good at it, if I must say so myself. Zoe, Tim, I don't see who else was in here tonight. They'll tell you. I just pound and pound and pound on RAS. Theo's in here. Phil's in here. Timothy's in here. Tim, I saw I changed it. Tim. So RAS adjustment specialist. That's it. That also says RAS, if you notice the little pun in play there. The old paradigm is over. The witch is dead. Reticular activity system. We'll talk more about it. All right, let's hit it. You got your homework? Keep posting your trades, guys. It's a pain in the ass for those of us helping you. It's taking a lot of our time, but I'm seeing the growth. I'm seeing the change. What some of you have done in 2 to 3 weeks just blows me away. You're absolutely right, Dio. Absolutely blows me away. And so let's just keep this pace of growth going. Participate in the group. Post your trades. Don't whine. Too much whining, big a sign that you have too little of a dream. I'll put up the Facebook link one last time here as we close down. And yet again, another hour session that is now an hour and 45 minutes. So take a screenshot of this slide as it populates. I'm going to wind down here. The weekend will be upon us in 2 days. It's even faster for you down under. And I will remind you, as always, life can be short. For those people you care and love, let them know you care and love them. Love you guys. I'll see you in Facebook land, and I'll see you next Monday. Have a good weekend.